Welcome back to another bootcamp video. Today, we're going to be doing a very important video, and that's the video you're all going to love, and that's called narrative. Narrative. Oh my gosh. If you could watch one video my whole bootcamp, it would be this one. Please. Just watch it thoroughly. Journal, rewatch it. If you don't understand something, don't move on to the next if you don't finish understanding it. Because this is what made me hundreds of thousands of dollars at 19 years old, solely from changing this one thing in trading, and that's listening to narrative. You can have a very nice setup, a nice take profit, a nice stop loss, a nice everything, but if you don't have the right narrative in your trade, you're going to lose. And that is why this is so important. This is so important, this type of video. It saves you from trading in price action like this. It lets you avoid messy, choppy openings. It saves you from trading in consolidation, right? It saves the distribution. It saves you from getting faked out and trying to take a short here and then you losing. Narrative is the sole deciding factor on winning a trade. Anything else is all about entry and where you place your stop loss and what you're targeting. But for narrative, if you don't have the right narrative, you can win a trade by having the wrong entry. You can't win a trade if you have the wrong narrative. So this is a very important video. So first I want to talk about two profiles that I've talked about before, and it's called the power of three and the accumulation, expansion, reaccumulation, expansion. These are two profiles, two intermediate time frame profiles that we want to use to pay attention to how are we going to find our narrative. Now, if we're going to zoom out here, which I want to zoom out a little, you're going to see that inside of this, we're going to start with the expansion. Usually we start with power 3. We're going to start with the expansion profile. What does this look like to you? Does it look like a missing piece of a puzzle? If you guess market maker buy model, you will get it right. And if you don't know what a market maker buy model is, I'll explain it later. But I'm doing it backwards, so it's a little bit hard. For people that already trade IC concepts, you'll know what that is. And you'll know how to identify when price action isn't going to form power of 3. Okay? So that comes from narrative. Narrative is basically seeing what has happened in the day, seeing what has happened in the week, seeing what has happened in the month, and seeing what has happened in the 4 hour, and being like, yes, it's showing a bearish setup, but we don't need to move lower. The higher time frame already did that. We already took sell side. We already did this. So the narrative is telling me it's going to move up higher. Why am I trying to look for bearish setups? This is the one thing that makes beginner traders lose, is because they'll see their setup, their beautiful market structure shift fair value gap, and they'll take the trade, and it goes like that because narrative is, whoa, what the heck? What the heck? Because narrative is, because narrative is wrong. Okay? So you look at these traders, and they're catching this stupid setup, and then they lose, and they're like, why doesn't this work? And they switch their model, and they go and do something else. With narrative, it basically tells them when they see their setup, they're like, oh, I'm not going to take this because in the higher time frame, it's different. For example, if this is the higher time frame, and sell side liquidity is here, and it goes like this, and this is where we are, and you see this on the, and then while we're just doing a little bit of that little push down, you go into the lower time frame and you're seeing this. The beginner traders are going to take a short here on that setup. The advanced traders are going to realize it's just a slight pullback and it's going to continue up higher. So for the beginner traders, they're shorting on the first setup they see in the wrong narrative because we already did this. We don't need to move down lower anymore. So this is where it separates you from pattern trading. These traders, they just look for a simple higher time frame PD array, and you can see, oh, it trades into this higher time frame fair value gap. Oh, it's starting to form a market structure shift. It's super easy to make it think it's going to push down lower because in hindsight, it's this. You could think this is the profile we're looking at. There's your high time frame PD array. You're like, oh, it swept liquidity. It's trading to a PD array. It's going to continue down lower. But the narrative was your target. If we hit the target, why do we need to go back to these lows? So price action is faking it out for the beginners. They're saying that it's trading to the higher time frame fair value gap. It's forming their model entry on the 1 minute, and they're taking it, and they're going to lose because it's not the right narrative. And this is what was happening. A little push down, rebalance, and then push back up higher. So your model can work, but some of the reasons why you find that your model does not work is because you don't use your discretionary thinking. The reason why we are better traders than AI is because we can go into the markets and be like, I've seen this before. I know what's happening. I'm not going to take my model just because of this sole factor. An AI can't do that. An AI goes, if this, then that. We can go, oh, you know what? I'm not going to take this even though it's my perfect setup. Narrative tells the story. If you wanted to take a short here and you were still bearish, you would have a lower draw on liquidity. Then you could be taking a short. You grab a fib and you're like, okay, we trade to a premium, even though it's not a premium. Let's just say it is. We trade to a premium, higher time frame fair value gap. Now we're turning down to that liquidity pool. Okay? But for me, we already took that higher time frame target right here. So there's no reason to continue down lower and do this. There is no reason. So when you drop down on the 1 minute into that, which is then looking like this, you want to ignore everything that makes it look like a beautiful entry. Turtle soup, fair value gap, market structure shift, whatever. You want to ignore this and be like, I see it's moving lower. I have a little bit of FOMO, but I'm going to wait for it to go like that. That way, not only do you miss out on a losing trade, but you get confirmation on when to get into a winning trade. See, traders are taking shorts here because of FOMO, because they're not knowing what they're looking for. But on the other hand, if you watch me streaming, you'll see me saying, I'm going to wait for this high to get taken. So you see it formed with the value gaps trading lower, and then people are getting in short, and I'm waiting, and then it breaks the high, goes like that. I get in the long there. Then it goes higher. It faked out shorts, one last leg of manipulation, pushing back up higher, and I catch the distribution. Okay? That is how you catch a winning trade. That is how you find the right trade in the right narrative. Because sometimes this short setup will work. Sometimes this setup works. It works. But it needs to be in the right area, because if you look at the 1 minute here, if we look at the 1 minute, how many times do you see market structure shifts? We're going to go into a previous week because this week was not a good week. But how many times do you see market structure shifts, fair value gaps in both directions? And how many times do you see it lose? Right? But the one time you see a market structure shift, fair value gap, after it takes its liquidity, it displaces and takes sell side, which was further back, at a specific time, 11 a.m., and it rips back up higher, low, high, lower, low, higher, high, trades back down into probably a 2 minute fair value gap, I'm going to guess there, right? Then it works. Okay? So for price action, you might be trying to find a long throughout this whole time to, let's say, target these highs right here. You're like, and you lose, and you lose, and you lose, and you lose. And then you wait for that one last leg of liquidity. You get into your entry, put your stop loss, let's say, at wherever the fair value gap is, you have a winning trade. Now, this isn't a good example, right? But my point here is that people took shorts here. People took a short here. People took a long here. People took a long here. People took a short here. But for me, none of this is what I want to look for. I either want to see one last rip below the low, then turn back up higher, or displace above these highs. In this instance, it ripped down lower, then turned back up higher. So a lot of the times you can have the right everything, but if you have the wrong narrative, you're not going to win the trade. You're not going to win the trade. I want to find a better example here. You can see we have power of 3. Boom, this is beautiful. Accumulation, manipulation, distribution. How did you know not to take a trade anywhere prior to here? Well, 930 hasn't hit yet. Remember what I told you happens at 930? Manipulation, where price action will manipulate some sort of buyers or sellers at the opening price level of 930. So when you see that 930 pushes lower, after we already traded a lot down lower, which means we took our sell side liquidity target, and then 930 rips us down lower again one last time, then instantly rips back up higher, breaking structure, you can anticipate that we're going to be bullish. So I saved myself from taking any longs here, and I waited for the right narrative, and then I took my longs here. Price action is tricky. It will try to fake you out. Even it'll make it so you know you're bullish, but you're still going to lose out on longs. You're going to be like, I'm bullish, I'm bullish, I'm bullish, and you're still going to lose on your longs. That's what price action does to you. But to get away from that, to skip over that, you need to know exactly what you're looking for, and if you don't see it, you don't engage. So for me, power of 3, accumulation, manipulation, distribution. And I catch my long trades in the manipulation, or if I miss it, I catch it in the discount of the distribution. For me, having a profile, which I will explain in another video, which will tailor back to this video, is so important to having narrative. And to do that, you need to see what price action is doing on the intermediate time frame. Where are we going on the intermediate time frame? What is happening? You want to go to the 1 hour, okay? And we're going to go a little bit more recent here. And you're going to be like, okay, I'm looking here at the 1 hour, and I see we have a beautiful fair value gap that we dipped into at what time? 9 a.m., which is probably 9:30. And now we closed all the way here. Now we're starting to trade up higher. What do I think is going to happen? Well, obviously, I'm using that the 1 hour is in a power of 3 profile. Accumulation, manipulation, distribution. Okay, that doesn't look right. But anyways, accumulation, manipulation, distribution. That's what I anticipated. And I caught along off of that. And then in a later session, when I saw that we manipulated one more time lower, I didn't anticipate a reversal. I anticipated that this was a retracement and we're going to go back up higher again. And I caught another long there. Price action will make it look like it's going to rip lower here and here. So it can trigger you into shorts. But then it's going to move up higher. So if you can get into the intermediate time frame to understand where price is going and be like, I know it's trying to fake me out here. I'm going to wait for it to confirm that the fake out's going to be over. Then I'm going to engage in for longs. That's how you win trades. Okay? So stop falling for a simple setup. Everything that I've taught you, these setups and PD arrays, they are nothing in the wrong narrative. This little, the fair value gaps that I showed you, the market structure shifts, the rejection blocks, all of that means nothing if it's in the wrong direction of price action, because price action is going to go up if it wants to go up, regardless of what setup it shows. So once you identify that it's going up, you wait for price to trade in the opposite direction of where you're going, and then you find your entry. It's so simple. You find a trend, you find your target, you wait for price action to trade away from its trend, and then you drop down to the 1 minute to find a simple entry. Then you find your entry in that drop down, and then you push up. On a smaller time frame, a little drop down, right? You find your entry here, and then you push up. Boom, trades into a fair value gap. And all of that is inside of what? Power of 3. Okay? Whoops. Accumulation, manipulation, distribution. That's a profile that hints into narratives. Okay? And on top of that, what is that also? You look at the daily chart. Why am I bullish? Because we took our target. So why am I going to anticipate we're going to go back down lower? When we traded all the way down here, I knew we were going to turn up, because why would we go back down lower when we took our target already? So I should only be looking for longs in this area. We're going to go back up to all-time highs. So I hope you guys found this video insightful. I hope you learned a lot from it, because this is what really changes your trading. Once you really learn how to study it and do it, I've made more videos about it. I'm going to make more outside of my bootcamp, so stay tuned for that. But please study narrative and profiles as well. Power of 3 is crucial. But remember, don't just take your setup just because it shows up. Okay? Don't. You need to have the right reason behind it. Other than that, thank you guys for watching. I'll see you guys in the next one. Take care. God bless and peace.